All right, thank you for joining us today. My name is Matt Hilland. I'm a financial planner here at Arnold Remote Wealth Management. And our webinar for this month, we're looking at a topic that is becoming more and more popular as a way to leave an inheritance for your family, especially for those that value education and want to pass down, hopefully some of those values of stressing the importance of education. And so I hope you already know that 529s are really one of the best ways to save for college expenses. A lot of people are using them to save for their kids or their grandkids' future education expenses. But recent laws have drastically expanded how 529s can be used, and that combined with their unique features are making them just very effective for passing down money to future generations. And so to start, I just want to lead with a slide detailing many of the expenses that 529s can now be used for, since some of these are new from recent law changes. And I also want you to think about, if leaving your money in a type of account that would really encourage these types of investments in the future is better than, maybe just leaving a big pile of cash for your future heirs. And so, of course, college tuition is here. That's always been the case. Might still be the big expense for that families want to save for. And so it's important to note that this means many more things than just your standard, 4 years of college too. It can be trade school apprenticeships and those types of things as well. So this does not mean, you're only saving for your family to go to a big university. But then even if you think your future kids, grandkids, or great-grandkids will never go to college, there are still a lot of other uses. One option is to fund a Roth IRA. This is relatively new, but this allows for 529 assets to be rolled over into the beneficiary's Roth IRA. There's some fine print here, but just know that 529s can also be a great way to help someone young get started saving for retirement in really one of the best retirement accounts possible. And I know just about everyone wishes they had, got started putting more money into a Roth earlier in life. And this is your chance to kind of help future generations do that. Then for years, there's always been an allowance to use 529s for certain kindergarten through 12th grade education expenses as well. What's new is that the annual limit on this is now increased to $20,000 per year. Was just 10,000, and there's a broader set of expenses that qualify here. And so now this can be used to cover private school tuition, for example, tutoring costs, fees for exams, instructional materials, and even therapy if there's any needed for any learning disabilities. Then another feature that's brand new for 529s is being able to use these for post-secondary education. So think of the many credentials that are out there. In our industry, this is CFP or Certified Financial Planner, CPA for accountants, SHRM for HR professionals, all sorts of medical training, RNs come to mind, and so on. There's a lot of different designations here that qualify. The point I want to make here is that now you will see many professionals that have a very valid use for 529s for their entire working careers. A CFP, for example, has close to a $600 annual fee. So a certified financial professional who spends 25 years in the industry will spend, $22,000 on this fee alone if you include a little inflation, not to mention maybe $5,000 for the education and testing. I'm sure many other credentials have very similar numbers here. I'm just familiar with this one, but there's some real value here for getting $30,000 not subject to state taxes or putting that money in early, having it grow, having that 30,000 tax-free to be able to use for these lifetime or lifelong learning expenses. And so this is a big, long, kind of exhaustive list here. Hopefully gives you the idea of the wide range of expenses that qualify. And what I hope you realize is that a typical family tree that goes down even just a couple of generations has a lot of opportunities to use money in a 529. Maybe your kids are already out of college and grown and old, but you could help them with Roth IRA savings if they're behind. You could help with their professional development. You could help lessen the burden of saving for their kids' college, saving for your grandchildren's college, or maybe their private schooling or tutoring. Of course, saving for your grandkids' Roth IRAs. If you want to leave an inheritance that has a lasting impact on these next couple of generations, how would you think about doing that? And it turns out 529s are just quickly becoming one of the best ways to leave an inheritance. And why that is for a few reasons. First of all, 529s have no real contribution limit. Roth IRAs, retirement accounts were limited to how much money we can put in there. Really, you're probably limited to the lifetime gift exemption, which is $15 million per person. So that's $30 million for a married couple starting in 2026. Today you could contribute $10 million to 529s for your family and may not have to pay any gift or state taxes at all. State 529 plans have some limits, but they're high. California, for example, stops allowing contributions once your account reaches a balance of $529,000. By coincidence there, money can still grow, so you could contribute 500,000 and watch it grow to 1 million. But a lot of states stop the ability to contribute once the account balance is over a certain amount. This isn't really a problem though, because you can always just open up a 529 in another state for the same beneficiary and have hundreds of thousands or more in limits. And so, yep, contribution limits really not a concern here. 529s are also the only account that provides tax-free growth really forever. Think about leaving a Roth IRA for your heirs. A lot of people think about that as kind of the best way to pass down money. Inherited Roths continue to be tax-free, but must be withdrawn in 10 years. And so IRAs, 401ks, HSAs, Roth IRAs, every other type of account loses its tax-free ability relatively soon after the original account owner dies. And of course, this is only 529s are only tax-free if used for education or some of these qualified expenses. But if used responsibly, you have unlimited tax-free growth here. Also, 529s have no required distributions. If one member of your family can't or doesn't want to use the assets in a 529, beneficiaries can be changed. No assets are required to come out of the account. It can sit in there for years and decades without being used. 529s also give the account owner a lot of control. And so remember, if you're the owner of a 529 and your grandchild, for example, is the beneficiary, you as the owner control when money leaves the account. There's a lot of other types of custodial accounts, but they all automatically legally become the beneficiary's assets at a certain time. And so you can be 100 years old, your kids can be 65, you still have control of the assets in your 529, not your kids, not until you transfer ownership to them. Sometimes important when we're thinking about inheritance here, 529s also provide creditor protection, and so it allows you to make sure money goes on to the next generation and not be at risk for any kind of lawsuits and things like that. And then I just think there's something about passing on money in this way and trying to help pass down some of your values, that education in its many forms is important, that investing in future generations is important. Perhaps there's an incentive to keep that money in this account, to keep that tax benefit too, compared to if you just handed the next generation a pile of cash here. And then finally, what's going to make this strategy work for multiple generations is that 529s can always change beneficiaries or be rolled into 529s of other beneficiaries any number of times. You just have to make sure that the new beneficiary is one of these relations to the original beneficiary of the account. This list is set by law, but it's a pretty broad list. If you save money in your kid's 529 and there's money left over, that can be transferred tax-free to their spouse, to their kids or your grandkids, I guess, to their siblings or your other children, their parents, you, I guess, their cousins, their nieces, their nephews, aunts, uncles, and more. And so unused money in a 529 is not wasted. There's going to be many uses for that money to help the original beneficiary and multiple generations thereafter. And I just want to give an example here and show why these features of a 529 can make them such a great way to provide an inheritance. Consider a couple who, just had their first grandchild, let's say. That gets them thinking about how they can start helping out with future education costs. And not only that first grandchild comes over the next, let's just say 4 years, they have a total of four grandchildren. This couple's retired or close to retired. They've talked to their financial advisor and know that they're in good shape for their own retirement and have come up with an initial amount of $100,000 to set aside. And I know this might sound like a lot, but remember, right now, this is just moving that $100,000 into another account that you own and have full control over. You can pull this money back if needed. We'll get into there can be taxes for doing so, but you're not exactly handing this money over to anybody just yet. You're getting it set aside in a very tax advantage account to provide for, your goals of helping your kids save for their kids' future college expenses. Uh, and so then as you go on to, you keep checking with your financial planner that you're still on a good solid financial plan, and you make some annual contributions to this 529 account as well. This might be withdrawing from an IRA at advantageous tax rates, filling up low tax brackets, maybe doing some accelerated IRA withdrawals before RMDs kick in and you have some extra money left over. Maybe you're selling appreciated stock, when you're in a low capital gains tax bracket. A lot of early retirees find themselves in a position like this. And so you invest that money in a low fee investment in a 529, and we'll just say it earns a rate of 5% over inflation. And just so you know, this is a little conservative. I think US stocks have earned something north of 7% over inflation over the past 40 or 50 years. Even international stocks are over this return, even though they've had a pretty poor, decade recently. And so this is not, from historical precedents, not, saying anything too out of the ordinary for investments. And then when the time comes to need this money, each grandchild has $30,000 per year in college costs. And then you also want to fund their IRAs once they graduate college at a rate of 7,000 per year for 5 years. So that's getting that $35,000 into their Roth IRAs. And so what happens with that initial $100,000 and your other annual contributions? Well, they grow here for a while. You're getting that great tax-free growth here in the 529. You're invested in low-cost index funds. You're really seeing this account grow. Over time, it reaches about $700,000. And then you start writing the big checks out of it, right? You pay for your four grandkids to go through school. That's kind of this first big dip here. You pay to help seed their Roth IRAs over the next few years as well. That's kind of the second dip here. And, all that happens. And even with that amount of money, you still have some money left over. And so, what should you do with it? Do you just withdraw it, consider it unused money? Well, there's a huge opportunity to not see it as wasted money and a perfect vehicle to remain invested in the 529, take advantage of years and years more of tax-free growth, and have it benefit future generations, other family members as well. And so, just for example, now let's say that each of your grandkids have two children, and so now your family tree has eight great grandchildren. Now the withdrawals of your grandkids, they put a dent in that initial value, but now the account is in position to grow once again. You have many years where you can get that tax-free compounding growth. And before that next generation's ready to use it, it'd grow to about $1.25 million. This account balance would then be able to pay for all eight great grandkids' college, fund their Roth IRAs, ultimately your $100,000 in funding plus those ongoing annual contributions you made to this would pay for just under $1.9 million in education expenses and Roth savings for the next two generations. And so your gift has given 12 people an education, provided them some room to start saving for retirement, to make sure they're getting off, on the right foot. I think this example is just a good indicator of the advantages of using a 529, with the intent to have your inheritance help out many future generations. And I just want to say here also for clarification, I know we're going to be looking at many decades in the future here, and you might be saying, well, I'm not going to be around to see my great grandchildren graduate college. But remember, you can change owners of 529 plans as well. And so at any point in this history here, um, while you are alive or at your death, you can just have this account switch to a new owner, the same beneficiary, but a new owner managing the account. And unlike any other type of account, the original owner dying doesn't really change anything. That money can still be growing tax-free for the beneficiary. Another common question is why to go through this hassle of using a 529 compared to just having the next generation inherit this money through a brokerage account. And one big issue is that 529s are just more tax advantage than a brokerage account. If you assume that $100,000 in the future contributions we assume there was just made into a brokerage account instead, there's going to be capital gains on dividends, potentially some interest, capital gains when investments are sold to actually pay those college tuition bills. I ran, I think, a very conservative estimate here where I assumed no other trading fees or costs. This money would still be subject to about $640,000 in taxes over two generations if it was put into a brokerage account rather than a 529 account. And of course, this varies widely depending on the investments you would use or if and when account owners would die and beneficiaries would receive a step up in basis and so on. But you're not going to see a brokerage account get out of some sort of significant tax bill over the years. And so when you factor in the benefit of the tax-free nature of a 529, having the $640,000 stay in the account, investing and compounding, it's just very hard to beat 529 in this case. And for another example, as we said before, 529s can be used for much more than tuition and Roth IRA funding. And so I wanted to look at a larger initial 529 funding example, but then also expanded use for that money. And so now we're looking at $400,000 into a 529. And I know again, this sounds like a tremendous amount of money, but just, look at those retirement projections your advisor's showing you. I think a lot of you will see a larger number than this at the end of your plan. And then we're not talking about giving this 400,000 away right now. We're putting it in an account that you own with full control just to be in position to be more tax advantage to fund those goals of future college expenses for your heirs there. And so now with this added amount, not only are you funding Roths and tuition, you're funding, in this case here, I just put $10,000 a year from kindergarten through 12th grade for each grandchild and great grandchild. And then also starting up some kind of what I just called a continuing education fund for each grandchild and great grandchild, just to help them, further their career and professional development going forward. And here's how that chart looks over time. Very same general shape here, easily able to handle those expenses of the next two generations. And Over those next two generations, again, 12 different individuals, the 529s are paying for more than $3 million in costs and eligible expenses, all tax-free. And so how do you go about actually executing this? Well, the first step is, regardless of how much money you want to contribute, $25 or 25 million, you start by opening up a 529 account. Every state, except Wyoming, I believe, has their own 529 plan. And so first you may want to look and see if your current state's 529 plan offers any state tax deductions for contributions. That can be a nice benefit that you should take advantage of. Also, you want to make sure that you have access to low cost fees. You want to make sure the investments there are under like 20 basis points or 0.2% for sure. I think there's about 25 states that have fund options below that cost, and some even below 0.1%. And so make sure that the state's 529 plan that you're using does not only have expensive options. And then again, if you're thinking of having this set up to be able to potentially help multiple generations, read the program description of the state's 529 plan. You want to make sure that they allow things like Roth IRA rollovers, allow for qualified withdrawals for secondary education expenses. Those uses that we outlined below are federal laws, but states' plans don't necessarily have to allow all of that. And so just double check that the account you're opening is going to be able to do what you want it to do. You'll set yourself up as the owner of the account with the kids or grandkids as the beneficiaries. And then you can also name a successor owner. This can be your spouse or your child. It can also be a trust, which we'll talk about in a minute. Set the investments. Maybe in my mind, you want this to be more of a static allocation, something like a 80-20, 90-10 type of allocation, rather than some of those glide paths that are very popular, just because you're funding this for, maybe many years into the future. Then, as new grandchildren arrive, you open up 529s for them and do rollovers or partial rollovers to those grandchildren 529s. And so, maybe what this ends up looking like is you have one large 529 that's kind of seeding many smaller 529s for each beneficiary. One common question here is on gift taxes and how those would apply. A contribution to a 529 is considered a gift. But new from the One Big Beautiful tax bill recently here, starting in 2026, gift taxes do not apply until you've given more than $15 million. And again, that's per person. So a married couple can give $30 million before they're subject to gift taxes. And I'm not going to cover a lot of the details here of what happens if you gift more than 15 million. There's a few other hassles here you'll have to deal with, like generation skipping tax that would pop up. 529s are a really great estate planning tool, even for these very, very high net worth households, but probably won't cover all the details here just because just doesn't apply to as many people. But the one thing you should know is that gifts over 19,000, that number changes every year just kind of based on inflation. A gift, including a contribution to a 529 over 19,000, requires an extra tax form to be filed. This just notifies the IRS. They can start keeping track of your gifts then. It does not mean any added taxes start to apply. Of course, any strategy has risks, and so here's a few that might be worth considering. There could be legislative changes. Maybe Congress eventually will end the ability to change beneficiaries on 529s, for example. And that is a real risk, of course. I can say I'm not familiar with any attempt that even raised this issue in Congress ever. They've had a lot of proposals out there. I don't recall ever seeing that as an option, but this is a risk out there. And I think I'd add this is a risk for any type of account. You could also say, what if they start taxing Roths or they eliminate the step up in cost basis for brokerage accounts? There's risks in anything you do. And perhaps, at the very least, This strategy would help you diversify from some of those legislative risks that are out there. And so you likely have a Roth IRA already, maybe have a brokerage account already. Moving some money into a 529 for inheritance just helps you diversify into a different type of account, maybe would reduce the risk of any kind of legislative change in any of those other accounts as well. Then there's always talk about higher education reform. Making college free is the extreme example here. Of course, that's a risk. I also would imagine that there would be some opportunity to get money out of 529s without penalty if they took away the reason to have a 529, but could be a risk here. And then also just stress that 529s can be used for many other expenses besides college tuition as well. And then there's a rule that is true for any kind of inheritance, and that's just how do you enforce your wishes once you have passed? And you'll do the work to set this up. How do you know that your grandchild won't just cash in this 529, to buy a Ferrari? And first, I'll just say again, this risk is with any form of inheritance, whether it's a Roth or an IRA or cash. The ability's there for someone to overspend if they want. So you're not eliminating it at all. Uh, but and so that same person would probably blow through it regardless of how you pass down money. But there is an opportunity to enforce it through a trust if you are really concerned about this. I would think this would only make sense if you're really looking to use larger dollar amounts here, really set up multi-generational type of account. But you can have a trust be the owner and manage these 529 accounts, and then the trustee would have the fiduciary requirement to manage the assets appropriately and not blow it on a Ferrari, right? And so I show a picture here of the Iowa 529 application. It's very easy and straightforward to open a 529 account with a trust as the owner. And then finally, if money comes out of these 529s that is not for qualified expenses, there are some taxes and fees. And so if that grandkid does blow it on a Ferrari, they will be paying Uncle Sam a little bit more. And again, not really a risk that's special to using 529s that would occur with any kind of inheritance, but just so you know, that's kind of the worst case scenario here is that this money is eventually not used as intended and that 10% penalty and income taxes on the earnings would apply. And so just in closing here, a few things to think about. First of all, not directly related to the concept of a multi-generational 529, but just since it's timely from the recent tax law, think about if you would benefit from a 529 account today. Recent changes have made them applicable to many, many more people. And if you're working, there may still be a good benefit to having a 529 for yourself. Then the features that make this so powerful of a strategy are the ability for 529s to grow tax-free forever. The flexibility in how you fund them. I know we gave some examples of funding for a retired couple. You can very well just have this set up with your beneficiary elections or, your wills to fund 529 accounts at your death as well. So if you're hesitant to set money aside now, do know that this is something that you don't have to necessarily do today. It can be a great option at any stage of your life. And then finally, I just think there's something to say about passing down values that stress the importance of education to your future generations. I think there's a big difference between, thinking that you're potentially spoiling someone with a very large inheritance compared to having a structure like this that sets up future generations to get educated, get a small head start with saving for retirement with a modest amount in a Roth. And, a lot of retirees find more value in just providing an inheritance that they feel has a real purpose. And this is a great way to do that compared to some other options that are available. And so thank you for attending. Hope this was helpful. A little bit of a complex topic, especially as we're starting to think about, generations of planning here and different tax laws, different state programs. And so I hope this was helpful in bringing up the issue. And of course, let us know what follow-ups you have, and we'll sit down and help you, through the specifics that relate to your situation here. So again, thank you so much for listening. If you have any questions, we're here. Send us an email or call at the office. And thanks so much. Have a good weekend. Bye-bye.